Greetings everyone, Joseph James here once again with your nightly newsletter brought to you by theschooloftrade.com. Today was September 28th, 2009. Before we talk about those trades we took today, I want to remind you guys we have a price increase coming October 1st. Please contact our sales team, sales@theschooloftrade.com, to lock in today's price. Now we will of course work with you guys. We do have a price increase coming October 1st, so it's only a couple days away, so contact our sales team if you guys are still sitting on the fence about lifetime membership. A free resource online, our YouTube page, /School of Trade. And when you're there, guys, please subscribe to our channel. Please rate and comment on this video. Let's take a look at the trade room totals for today. We took one trade today. Pretty sideways, kind of consolidated, low volume market this morning. We, of course, had Yom Kippur, a Jewish holiday here in the market this morning. So that kept a lot of traders out of the market, I think. But we took one trade fit our rules. We took one trade, one winner. And as usual, right, very consistently making money here. $80 in our pocket this morning. Now, I want to remind you guys, last week, we saw the same thing last week. Very slow Monday. But then, of course, we made a great rest of the week there, making over $1,200 last week, only 4 contracts. So we're going right along with the schedule here this morning. Monday morning, we expect things to be a little bit slower. Total here, just over $3K, $3,200 on 4 contracts here in the month of September. And we'll keep you guys posted as we move our way through. Term of the day today is layer or layers of risk. Now, this is a term we use. In fact, we used it a lot this morning in the room. It's used to describe the many different elements that contribute to the risk of a potential trade. Now, you're going to hear me say things like the chop zone, slow price action, and the stutter step pattern are different layers of risk and will avoid this trade. So we use this term layer of risk to identify or describe the different elements that contribute to the overall riskiness or lack of riskiness on each potential trade. Now, basically, we use our entry rules to identify these layers. So different rules that we use for entries, if they do not fit our rules, then that identifies one more layer of risk. So as a conservative trader, I will avoid trades with multiple layers of risk. As a more aggressive trader, I will take trades with, of course, more layers of risk, right? The more layers we have, the more aggressive I'm trading, the more risk in each trade. And basically the idea here is to take the trades, that is conservatively speaking, to take the trades with the fewest or no layers of risk, and that of course will be our perfect trade patterns. Now here are some examples of different layers. Now again, these are going to be, there's a lot more than this, but some simple examples of different layers of risk might be the chop zone, right? The center of a sideways bracket. Slow price action, maybe the time of day, maybe we're right in front of a news event, or the location of a trade, right? Trading into overhead resistance or support below. Maybe we have support and resistance nearby, maybe the slope of our trigger line is flat. And of course, there are lots of different examples of layers of risk. There are 2 types of traders that we see every day in our live trade room. There are aggressive traders and conservative traders. Now, some conservative traders are trying to be more aggressive. Some aggressive traders are trying to be more conservative. In other words, we need to find out what your obstacle is, right? Whether you're an over trader or an under trader, right? Whatever your obstacle is for your trading, for your growth as a trader. And of course, we use these layers of risk to identify the trades to take. So let's say, for example, I'm an aggressive trader. Well, as an aggressive trader, I can choose to take trades that have 2 or more layers of risk, right? So slow price action, flat trigger line, and less than 6 ticks, right? There's 3 layers of risk right there. And of course, that's going to get me into more trades, but there'll be higher risk on each trade. So as you can imagine, right, an aggressive trader, of course, by taking trades with more layers of risk, that means that it's not going to fit as many of our rules, which means, of course, you will take more trades every day, but each trade will have higher risk. Now, a lot of our members this morning ended up taking some good higher risk trades. They were more aggressive traders this morning, and they made out like bandits. Now, for me, I'm a conservative trader. And of course, we trade very conservatively here in our live trade room, so we can show you guys the best trades to take, right? We don't want to be over trading. You guys need more discipline and patience in our trade room than anything else. So what I try to do in the trade room is to demonstrate being very conservative. And that means I will take up to 1 layer of risk. So for me and a lot of other conservative traders or over traders that are trying to find a way to get wraps underneath, they're over trading, right? They're trying to get themselves under control and not be over trading so much. They can, of course, rely on a conservative approach, that is, using only 1 layer of risk, which means we'll only take fewer trades every day, but there'll be lower risk on each trade because each trade that we do take will, of course, have more of our rules will have lined up perfectly. Once again, guys, it's called layers of risk. And again, we use these layers to help you achieve, whether it be aggressive trading or conservative trading. It helps you basically understand when to take a trade and when not to take. And of course, it describes how much risk is on each trade very easily. Okay? Now, of course, we're going to go over with you guys more information about that in our live trade room tomorrow morning. Now, tomorrow's a Tuesday, so Tuesday through Friday, we open up our European session at 2:45 a.m. So European traders, guys, if you want to come out and join the Euro session, 2:45 a.m. Eastern time, we open that up. We'll usually break at about 6 a.m., and then, of course, the U.S. session will open it up at 7:45 a.m. Eastern Standard Time. So no matter which session you want to trade, guys, we've got you covered. The European session and the U.S. session, either at 2:45 or at 7:45 in the morning. All times are Eastern Standard Time. Now, don't forget, guys, tomorrow's a Tuesday, so Tuesdays and Thursdays, we have free webinars at 11:30 a.m. And get a copy of that beginner's course. If you're coming out to join us tomorrow for the first time, or if you're trying to find more information about how we trade, why we trade, when we trade, grab a copy of that beginner's course right there on our homepage. Let's take a look real quickly at some of the trades we took or didn't take today. Now, this example here, just before 9 o'clock, about 8:42, 8:43 here in the market on the DAX. Symbol here is FDAX. We were looking for a breaker long here. A wave long. Now, this wave long was disqualified because we had three different layers of risk. We had decreasing pace of the tape, a flat trigger line, and momentum was against us. So as you can see, 1, 2, 3 layers of risk. Decreasing speed of the tape or the pot, flat trigger line, right? Not a steep slope to it, and momentum was not in our direction, it was against us. So 1, 2, 3 layers. And once again, if you look down to the lower left-hand corner of this monitor right here, you'll see we have the pace of the tape indicator. Now, above everything else, the most important thing for all of our trades is volume. I want to see increasing speed of the tape in and around my setup area. So while price was pulling back here, come back to test this trigger line at about that 76.5 level here on the DAX, we knew right away this is not going to be a trade to take. We didn't even need to read the time and sales window. We knew by looking at our pace of the tape indicator, you can see right there, very easy to see a pattern develop, a decreasing speed of the tape. And again, without even needing to read the time and sales window, we knew to stay away from this potentially disastrous trade on this wave long here at 8:45. That saved us 6 ticks there on the DAX. So a very costly mistake if you get in this one. But if you followed our rules, you were with us and we avoided that trade. Another example here, guys, on the crude. Now, this happened just after 9:15. Just before we took a break here from 9:15 to 9:30, we were looking for a breaker long here on the crude market. Symbol CL. And, of course, this one had 2 layers of risk. Right? Again, an aggressive trader will take over as many as he wants, but a conservative trader, right, he or she will take only 1 layer. So I avoided this trade because it had 2 layers of risk. Decreasing pace of the tape and momentum against us. So 2 layers of risk here, guys, on this breaker long on the crude. Now, of course, again, we didn't need to read our speed of tape. We didn't need to read our time and sales window. We simply look at our pace of the tape indicator, and we knew right away that the speed of the tape was decreasing at the wrong time, right? When the speed of the tape decreases when we're going into our setup, we know that fewer and fewer people are looking at that market, at that price level, as a place they want to participate. So we'll wait for price to start speeding up again before we start looking to take that trade. Again, this potential breaker long, once again, followed our rules. Our rules save us money. And as you guys can see here, we didn't have to worry about giving back any of the hard-earned money we made last week to the market this morning. Now, the final move we had this morning, we finally got 1 trade taken this morning here on crude. We waited all morning. Price action was a little bit sluggish here towards the end of the morning, so we had to kind of use some patience. But basically, guys, 11:30 this morning, right? 11:30 this morning on the crude. This is a 2-step short. Entry here was at 67.20, and of course, this got us our first 8 ticks, our first target of 4 ticks. Took 2 off at 4, and got scratched out when price kind of chopped back up into our entry here on this 2-step short. But of course, one of the key components here was waiting for the speed of the tape to increase. On this 2-step, if you guys are with me here in the room this morning, the initial move was not qualifiable because momentum was against us and the speed of the tape was very slow. In fact, it was decreasing. So what we had to do was we had to wait for this thing to really set up according to our rules. We waited for momentum to curl. We waited for the speed of the tape to increase. And when we did that, we got into our trade here, filled at 20, got our first 4 ticks, got bounced at our point of entry, right? We never let a winner turn into a loser. And of course, great example here, guys, on the crude, a winning trade that put us in the green for the day here. Want to remind you guys also, we're going to go over all this stuff tomorrow morning, guys, 2:45 a.m. Eastern Time. We open up the room for the Euro session. 7:45 Eastern Time, we open up the room for the U.S. session. We'll give you plenty of time to ask questions. We'll give you a free 3 weeks as part of our trial. And guys, I want to remind you, please rate and comment on this video. The beginner's course is highly recommended for free trial members. My name is Joseph James. For more information about lifetime membership, drop us an email, sales@schooloftrade.com. We got a price increase coming October 1st. We'll see you guys tomorrow morning, 2:45. Bye-bye for now.